Egypt, Ethiopia and Sudan agreed to U.S. brokered deal over Nile Dam. Total plans world's deepest offshore well to stem Angola decline. And Ethiopian Airlines to start building new $5 billion airport this year. Thank you for joining us and welcome to Business Incorporated. I'm Chimezi Obi Iwagwe. We get the show started with the markets. And after 2 days of decline, the Nigerian stock market went back into the positive zone today. As at midday Nigerian time, the index was up 0.20%. The JSE index in South Africa was down 0.14%. In Egypt, the main index traded in the green, up 0.34%, and Kenya closed in the red on Wednesday. And in the Middle East, most major Gulf markets were up at intraday, led by their financial stocks amid rising oil prices. Saudi Arabia's index rose 0.15%, with National Commercial Bank, the kingdom's largest lender, adding 0.4%, and Samba Financial Group increasing 0.6%. The Qatari index was up 0.60%, with Qatar Islamic Bank gaining 1% a day after it reported a rise in annual profit. In Dubai, the index added 0.37% as Emirates MBD Bank advanced to 1.9% and DXB Entertainment was up 1.1%. Abu Dhabi's index ended up 0.10%, supported by a 0.4% gain in the country's largest lender, First Abu Dhabi Bank. And in Europe, stocks were stagnant in the morning as reaction appeared muted to the signing of a partial trade deal between the U.S. and China. Let's get more facts from Ulrich. Hello, Ulrich. Good afternoon. Well, the entry agreement to a trade deal between China and USA is finally signed. There was skepticism yesterday before the fact that it will do much for markets that it was priced in. For example, is that what you are seeing today in Europe, a lackluster response?
That's right. When you look across Europe, there's hardly a market that is gaining. The losses are not very big. If I look at the DAX here, it's going down by 20 points. That's nothing. And it's still, within striking distance of its former record high. But it's not going anyplace because, of course, there's the realization there that the end of phase one means the beginning of phase two. And that's also going to be long and drawn out. People are convinced of that, especially with the elections in the United States in November. Donald Trump being seen as keeping trade a hot issue with which he wants to score close to the election, people believe. And also, of course, when you look at the environment around oneself, there's the Brexit that is also an issue that is looming. So there's a bit of sobriety setting in after all that, looking forward to that final signing of the agreement.
Now, auto sales grew in Europe in 2019. That's according to a report coming out today. But then cars were not exactly racing out of the showrooms to the customers. What will we see in 2020?
Possibly not even the 1.2%. EY, the consultancy firm, says that they expect a double-digit slowing in some markets. And that, of course, does not augur well for important engines for growth in Europe. The car manufacturers in France, for example, in Britain, where BMW manufactures the Mini, in Italy, in Spain, where there are factories, across Eastern Europe, where there are factories, and of course, especially in Germany, where the auto industry is seen as a key industry. And adding to the difficulty of the car industry is that need to do two jobs at once. Sell enough conventionally driven cars to finance e-cars and self-driving cars. And that won't be easy because there will be stiffer CO2 emission standards 2020 than in 2019. And also, of course, developing e-cars into a market where the auto industry doesn't really know how big it will be and what kind of slice it will get from that.
Still talking about some corporate news there. The share prices of the two leading German lenders, Deutsche and Commerzbank, reflect that they are in crisis mode. Statistics compiled by the bank supervisors at the ECB seem to confirm that. But is that the whole story? Tell us what those numbers reveal.
Yeah, I don't think it's the whole story when you just look at the analysis of the ECB, but when you look at the naked numbers, it is kind of shocking because the big banks in Europe, the ones that are supervised by the ECB, had the profits shrank by 8%. 66 billion euros in the German banks that the ECB supervised, and a big chunk of that minus is from the two biggest German banks, the Deutsche and the Commerzbank. Their profits amounted to just 668 million euros, and that's only 12 million euros above the combined net profits of the Greek banks. Greek banks, which were partly responsible for the Greek crisis, and the Greek crisis, one of the factors in the euro sovereign debt crisis at the beginning of the last century, and Greece still not really on its feet, or the banks. So that paints a drastic picture. But the poor performance of these two German banks is mainly colored by a huge write-down by the Deutsche Bank in the last year. It needs restructuring. It has to let go of people. And that's costing it 4.1 billion euros. If that were not the case, then the picture would look a lot different. But of course, a restructuring needing that kind of money also kind of speaks for itself.
All right, thank you, Ulrich, for those updates. Enjoy the rest of the day.